Gold has been a store of value for 5,000 years. Bitcoin has existed for just 15. And yet, in the last decade, Bitcoin has outperformed gold by over 10,000%. So which one should you own when the dollar falls? Are they competitors, or are they actually on the same team? Today I'm breaking down gold versus Bitcoin from a pure macro perspective. No bias, just data. Let's get into it. First, let's understand why gold and Bitcoin even get compared. They share three critical characteristics. 1. Limited supply. Gold cannot be printed. There are only so many tons in the ground. Bitcoin cannot be printed either. There will only ever be 21 million coins. Both are scarce by design. 2. Dollar hedge. When the US dollar weakens, as we covered last week, both gold and Bitcoin tend to rise. They both benefit from the same macro tailwind. 3. Store of value. Both are used by investors as protection against inflation, currency debasement, and economic uncertainty. This is why they often move together, and why understanding both gives you a massive edge in macro markets. But here's where it gets interesting. Because they are not the same asset. Gold is the safe haven. When markets crash, when uncertainty spikes, when fear takes over, gold holds its value. Sometimes it even goes up during crashes. Investors worldwide have trusted gold for centuries. Bitcoin is the risk asset. When markets are risk-on, when liquidity is flowing, when investors are confident, Bitcoin explodes. But when fear hits, Bitcoin often crashes harder than stocks. Think of it this way. Gold is defensive. Bitcoin is offensive. Gold protects capital. Bitcoin grows capital. In a global recession or financial crisis, gold wins. In a liquidity expansion, post-halving bull market, Bitcoin wins. The smartest macro investors don't choose one. They understand when to hold which. Let's look at the historical comparison. 2020 to 2021. Dollar weakened, liquidity flooded the market. Gold rose from $1,500 to $2,000. A 33% gain, solid. Bitcoin rose from $8,500 to $69,000. A 700% gain. Explosive. Same macro tailwind. Completely different magnitude. 2022, Fed hiked rates aggressively. Dollar surged. Gold dropped from $2,000 to $1,620. About 19% down. Bitcoin crashed from $69,000 to $16,000. Over 76% down. Same macro headwind. Again, completely different magnitude. 2023 to 2024. Dollar started weakening again. Gold made new all-time highs above $2,400. Bitcoin recovered and also made new all-time highs above $70,000. The pattern is clear. Gold moves. Bitcoin amplifies. Whatever gold does, Bitcoin tends to do more, in both directions. So how do you use this information practically? Here is the macro framework I use on this channel. Watch the DXY first, as we covered last week. Dollar direction sets the environment for both assets. Then watch gold. Gold moves first. It is the more liquid, more established market. When gold starts moving up, Bitcoin usually follows within weeks to months. Think of gold as the signal, Bitcoin as the amplified response. Right now, gold has already broken above $3,000 and made multiple new all-time highs in 2025. Historically, this is exactly the kind of gold strength that precedes a major Bitcoin move. Combined with the 2024 halving and a weakening dollar, all three macro signals are pointing in the same direction. So the question everyone asks, gold or Bitcoin? The honest macro answer is, it depends on your goal. If your goal is capital preservation, protect what you have, gold is your asset. It is less volatile, more stable, and has centuries of trust behind it. If your goal is capital growth, multiply what you have, Bitcoin is your asset. Higher risk, higher reward, and driven by the same macro forces as gold but amplified. The best portfolio approach: own both. Use gold as your foundation. Use Bitcoin as your growth position. Size them according to your risk tolerance. This is exactly how large macro funds and family offices are positioning right now. To summarize, gold and Bitcoin are not competitors. They are macro allies driven by the same forces: dollar weakness, inflation, and global liquidity. Gold moves first. Bitcoin amplifies. Watch gold as your leading indicator for Bitcoin. Watch DXY as your leading indicator for both. That three-indicator framework, DXY, Gold, Bitcoin, is exactly what I track on this channel every single week. If you want to understand markets at this level, subscribe. And if you missed our DXY video from last week, watch it next. It connects directly to everything we covered today. See you next week.